What's up everyone, it's Caddy with Money Investing. In this video, we are going to be talking about the upcoming week, and it is going to be packed with earnings, and not to mention the most important event of the day, of the year, Jackson Hole Economic Symposium, August 24th, August 25th. August 25th, more specifically, is when Jerome Powell is going to be talking at 10 a.m. Eastern. Your boy is going to be live during that time, so get ready. It's about to get crazy. Last year was brutal. This year, I'm not expecting it to be anything even close to last year's sort of event, but nonetheless, still very, very important. I want to make a correction. This is Caddy with MoneyVest because right now we're doing a little bit of rebranding, and I mentioned this in our Discord. So we are dropping the ing from our name, and I know we're all gonna miss it very much. I'm already missing it, but that's how things are going to go moving forward. So it is going to be MoneyVest. All our channels, all our branded channels, MoneyVest Reads, MoneyVest Real Estate, and MoneyVest Europe, everything is going to be changed, and it's already done to the new handles and the new names. So I hope you guys enjoyed this video. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. 16% annual discount available till the end of this month. 10 more days for you to take advantage of that if you want to be a part of our money investing community, and of course get access to all the alerts, members only private videos, and intrinsic values. Link's going to be down below. So this right here is going to be the economic calendar. So we do have a little bit of a housing week because we do have existing home sales coming out. We've got the new home sales coming out. We got the mortgage applications obviously coming out every week. We've got the PMI composite flash, Richmond Fed manufacturing index, giving us a little bit of an insight into the economy and of course the GDP itself. Jobless claims, Chicago Fed national activity index, durable good orders. Of course, we got the Fed's balance sheet on Thursday. Every Thursday comes out at 4:30 p.m. after the markets close. But this right here is the big day, Friday, August 25th. Add this to your calendar because Jerome Powell is going to be coming out with the speech. Hawkish, dovish, we're going to find out. But I think he is going to once again stick to the script, making sure that he makes his message known, and the fact that inflation is going to take a little bit longer in coming down. It's going to be persistent. Consumer sentiment is also coming out at 10 a.m. Eastern as well. So those things right there, very, very important stuff. And like I said, I will be live to cover all of it. This is going to be the earnings calendar. Zoom is going to be reporting after the bell Monday. I'm going to be doing a video on Zoom here very soon. And of course, we got Baidu, we got Macy's, we got Medtronic, Lowe's, Canadian Solar, Dick's Sporting Goods, BJ. So it's going to be a continuation of that retail week that we got from last week. Then we've got Peloton reporting on Wednesday before the bell, Advanced Auto Parts, Kohl's Analog Devices, Foot Locker. So there's a lot of interesting companies here. We've also got Grab reporting their numbers. And then the most important company on the planet right now, NVIDIA, reporting after the bell. I've already done a video on them, so make sure that you do check that out if you haven't already. Snowflake is reporting this very same day after the bell. Splunk, Autodesk. We got NetApp, and that's pretty much it. And then we, of course, got Dollar Tree, Burlington, TD Bank, Futu, RBC. Then we got Petco, Affirm, Ulta, Intuit. I've already done a video on them earlier. And of course, Marvell is going to be reporting with Workday, Gap, Nordstrom, and Credo also reporting their numbers. Now, going over to the markets, so S&P 500 first. Now, this right here has been 3 consecutive weeks of red, right? So we have already seen the markets pull back pretty dramatically. This week, last week of July, down 2.2%. First week of August, down 31 basis points. This past week, down another 2% for the S&P after getting rejected at this resistance at 4,600s, right? So 4,600, 4,620, 4,630, very, very strong resistance levels for S&P at those levels. And of course, we're starting to see a bit of a pullback with the RSI and the MACD obviously showing signs of some weakness after becoming very, very overbought. So we are now experiencing a pullback and a dip. Now we're sitting at a very strong support. So you'll notice that we're right at that 21 EMA. And of course, this green rectangle, which has previously acted as both a resistance, turned into a support. And now, once again, in my opinion, acting as a support. And below this level, right? So in case the markets break down below this 4,300 level for the S&P, I would not be surprised to see us down at that 50 SMA, which is going to put us down at 4,200. That's going to be in line with this higher low. And of course, this previous horizontal resistance acting as a new support. So we got a lot of confluence, lots of demand at 4,200. And that's about as low as I could see the market go down to during this cycle of pullback, dip / correction. So I made myself very clear, although I did make a prediction yesterday in one of my videos. Towards the very end, I specifically mentioned that I do expect the markets to be higher this upcoming week on the back of Jackson Hole. And the reason for that is because 3 weeks of consecutive red, I think it's very normal for us to see a bit of a pullback back higher, but that still won't stop us from seeing the following weeks to see a bit of a breakdown below 4,300 and maybe come down to 4,200. But that's about as low as I could see the S&P get down to. NASDAQ is in a very similar situation where it's kind of hovering over that 21 EMA and that support, which again previously acted as a resistance for the NASDAQ. We're right now already at that higher low over here. And if we do see a breakdown below this, well, then we got to strap up because it's going to get a little bit crazy and we could be down to 12,200, 12,300 levels. So that right there is going to be that next support level to watch for the NASDAQ moving forward. So those right there are going to be some key levels to watch. And of course, volatility has been creeping up. So 20 is going to be about as high as I could see the volatility get up to on the back of this Jackson Hole. And that's going to put the S&P down at 4,200. NASDAQ probably another 1,000 points lower. Yep, so 1,000 points lower from where we are at the moment. Exactly 1,000 points from these current levels. So that's going to be it for this video. Hope you guys enjoyed it and found it helpful. Again, a pretty big week here with lots of earnings and a lot of economic data coming out. Now, a few more things that are going to be very important. Number one, the market is still not in favor of the Federal Reserve's interest rate hike that they have already mentioned and penciled in their SEP. So there is one discrepancy right now. This is not the same as last year when there was a massive disagreement between the market and the Fed. The Fed constantly kept telling us rates are going higher, rates are going to be higher for longer, and we're going to keep hiking. The market did not believe that. And guess what? August, September, brutal months for the market last year. We were down 16% to be precise from those highs. This year, it's not the same. This year, we've already gone through the majority of those hikes. There's only one, maybe two hikes left from the Federal Reserve, in my opinion, that may not have been priced in yet because the market's still believing that we're going to be here, higher for longer, a pause going forward, and then cuts all the way from 2024. So that is the only discrepancy that's left. That's the only thing that can get priced in now from the market and maybe put us down a little bit further. But at the end of the day, a lot of it still depends on where inflation goes because we still have not brought it down to 2%. So we're still persistently high. And maybe that's what the Federal Reserve and Chairman Jerome Powell focuses on. And then again, how many rate hikes do we have left? When are we going to pause? What's going to be that terminal rate? And when do we start rate cuts? And why do we start rate cuts? So those are all the questions that need to be answered in order for the markets to go from this uncertain environment to a more certain environment. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Don't forget 16% annual discount available till the end of this month. Link to our Discord, Patreon is going to be down below. Access to everything, members-only private videos, and intrinsic value spreadsheets, and everything else. So as always, happy investing. And this is, again, Caddy with MoneyVest. Happy investing. I'll see you all in the next video.